And hot diggity dog, you guys, welcome back to the Invested Dog. Today we're going to talk about General Dynamics. If you want to talk directly about the stock, go to that 6-minute mark. For everyone else, let's dive a little bit into the history of the stock and why it is the way that it is. So General Dynamics Corporation is an American industrial and technology company, and they're based out of Virginia. They're primarily a developer and a producer of advanced military equipment. Why is advanced military equipment important to us? Because we could be going into a recession. We're always going into war. We're always going into unfavorable times here in America. So this is a great stock to have in the portfolio. Now, there's a lot, the GD, that's their ticket symbol. They are constantly in the headline. They're constantly talking about what's going on here, what's going on there. General Dynamics is experiencing a mixed analysis statement, and I want to talk about why that's the case. So why the narrative around General Dynamics GD is shifting on mixed analysis signals. This report by Wall Street, Simply Wall Street. Let's get rid of that ad. This is what they have to say about the stock. Finding winning stocks is in a market cycle. Make sure you join their platform. The latest fair value estimate for General Dynamics has been adjusting from about $392 to $393, which is a small move, but that still matters because it's making you think about the upside versus the current trading level. Recent Street research blends both bullish and cautious views, with some analysis lifting targets and other trimming them, all circling around how much they should pay for the stock based upon their PE. Some of the bullish outlooks: Morgan Stanley recently raised its price targets from $25, which signals that its analysis sees more room in the current PE for investors to grow. So does Wells Fargo. Wells Fargo thinks that the coverage that they have is positive. They think that this could be a bullish stock to put in your portfolio, especially as we could be going into a recession. Some people think that we are already in a recession. Bearish takeaways: the Deutsche Bank shifts to a more cautious view and downgrade the stock, pointing readers to risk around executive and how much optimism is already reflected with the current PE. Citi reduced its pricing target by $9, and Jefferies trims its target by $5, both signaling concerns that the stock's recent evaluation could possibly go down. So there's lots of surrounding this. Donnie Trump, and the secretary are set to meet to the White House with CEO of several defense companies. This is including this company is included within those that are meeting with Donnie Trump, and they're all discussing weapons that to help to produce for the war with Iran. Yes, we are still at war with Iran. It is so tiring to wake up every day and to see more casualties, more just sadness. I hate seeing that, but hey, that's the times that we live in. GD, again, General Dynamics Board of Directors declared a regular quarterly dividend of $1.59 per share on the common stock, payable on May 8th, and that was today. Today's May 8th, of course, at 8:30 p.m. at the end of the stock market. And this was recorded as of April for 2026. Yeah, there's constantly headline. Let's look at one more article before we dive deep into the stock. Here's why we think General Dynamics GD is worth the watch. And this article is, from Simply Wall Street. Let's get rid of that ad. The excitement of investing in a company that can reverse its fortunes in a big draw from some speculators. So even companies that have no revenue, no profit, and no record of falling short can manage to find investors. And sometimes these stories can cloud the minds of investors, leading them to invest with their emotions rather than off of good merit and off of numbers. And despite being the age of tech and stock and blue sky investing, many investors still adopt more traditional strategies. I am one of those investors. I believe that numbers don't lie. You should be able to look at their profit margins, look at their revenue versus their earnings, and try to guess, have an proper estimate of how this stock is going to go. So buying shares of profitable companies like General Dynamics, ticker symbol GD, while this doesn't necessarily speak to whether it's undervalued, it's worth to watch. It's worth to watch. So let's go ahead and dive directly into the stock. Today, it was closing out at $1.23, lower than what it opened up as. But if you look at the long run, yes, it's down just a tad bit, just a little bit. It's pretty much breaking even for 6 months. For the 1 year, it's up almost 30%, and for the 5 year, it's up almost 78%. But I believe that this is a great stock to invest in during times of uncertainty, mainly because this is a defense stock. This is a defense weaponry stock. So this is always great to have in their portfolio in times of uncertainty. And then on top of that, it pays dividends. That's amazing as is. Again, General Dynamics is experiencing some mixed analysis sentiment with recent adjustments to its fair value and ongoing strategic collaboration. But you can't really go wrong with some of these defense stocks. Some of these defense stocks are really good. And despite a 6.9, almost 7% annual growth over 5 years, GD is flagged for slower growth compared to the peers. I still think that it is smart to invest in this. Let's look at the revenues versus the earnings. So 2022, it is a pretty big disparity between the revenue and the earnings. For revenue, they brought in almost $40 billion and the earnings close to $4 billion. And it's been pretty consistent with 2023, 2024, and 2025. The quarterly, again, kind of for the most part consistent, but they have been hitting their earnings per share pretty consistently since Q2 of 2025. Again, a lot of analysis recommendations are saying to buy, some are saying to hold. It's a mix signal. It's a mixed analysis evaluation on what we should be doing with this stock. My personal opinion, I think you should take a little bit of money, take one paycheck, or take some money, maybe about $600, and invest in this stock. Maybe about $700 and invest in the stock, because I think that the long run of this stock is smart. Profit margins are 8%. That's pretty decent. Typically, your portfolio should be growing at minimum 8% year over year. So I think that that's not too bad. Returns on assets is about 6%, and returns on equity is about 18%. Market cap is almost $94 billion. That's a lot. A lot of people are getting into that. And enterprise value and revenue is almost $2 billion. That's a decent amount. So in the comments below, tell me what you think about this stock, if it's smart to invest in defense stocks during a recession, and if it's smart to invest in this particular defense stock during this recession that we're in. As always, this is the Invested Dog signing off.